Well, it's good to be with you today. This is Buddy Crum, Dr. Buddy Crum. I'm glad to be here with Don Wells again. Always like to be with you, Don. Let's talk about investing.
Yeah.
Help me invest, right? That's what
Help
we
me
need.
invest. Helpmeinvest.com. And for those that are listening, that's one of the things that we've put together as a tool, a resource to help investors that are looking for some guidance. As always, we remind people we're not selling products. We don't have something to sell you. We're trying to help you get your money working for you, because one of the things that as you begin to invest and you see things grow, you'll begin to understand how powerful compound interest is and how it can aid in helping you to build wealth. You know, the thing that we always try to remind people and say, maybe ad nausea, but it's so important, is that when you start investing, is to do so consistently. Get in something, stay in something. We call that in the business, by the way, chasing hot dots. That's one of the things you avoid with your clients and helping them. Well, I want to buy this. That's the next hot dot, because what goes up can just as easily come down. So chasing hot dots is what the term that we use in chasing that next hot stock that I want to get a hold of. And if we could predict that, well, that'd be a completely different conversation going on. But since we can't, and since some of the best in the world can't predict those, for the average investor with a few $1 million, we like the buy and hold strategy. Just continually invest. Indexes are good because it gives you that diversification. You can get into bonds, and you can buy, you know, the great thing about indexes, we're not just talking about U.S. companies, by the way. You can, there's and you need that in your portfolio. You need some international. I like emerging markets. They're all going to act differently. They're all going to have this, you know, to get what we call an efficient portfolio is to have all of those stocks diversified across, that you have that inverse relationships. You've got some stocks and bonds that are going to have a different correlation. You're going to have international markets. You're going to have emerging markets. And so all of that in a portfolio and getting that involved, and that's what you're buying into when you get a diverse index, is you're getting exposure to all of that.
You know that many people don't realize how many of the investors are foreign investors into our economy here. Is still considered a very safe compared to others. However, many of the others have outperformed us, other countries, international stocks. And it's you know, it's very sophisticated. We need to leave it up to the professional, unless you can build a portfolio that's diversified and work it very, very stringently.